Hi, Taj. So good to see you. And thank you for joining Scale Up Africa on this podcast on global wealth and impact.
Thank you so much for inviting me. I look forward to this conversation.
Great. So you were dialing in from California. We just had a really interesting conversation about Silicon Valley and, just how the culture has really been cut and pasted into different, places in the world, and much debate around, the effectiveness of that strategy. And so how we're looking at how the world has moved on in terms of geopolitics, affecting everybody's, price of food, price of petrol, price of fertilizer. Geopolitics is no longer a sort of abstract concept for academics and economists. It's become very mainstream in terms of all the activities we've seen in the world. So yeah, tell us about your impactful journey. Like, how did you start, and how did you get to where you are right now in terms of looking at how we make capital flow towards massive problems like climate tech?
Absolutely. Thank you for that question. For me, as a person who studied geopolitical economics, this time makes me so excited and ecstatic because people are finally seeing what we've been talking about for years. And also, it's no longer theoretical, it is real time. So, a lot of the DBAs, they can leave us alone now from them being action orientated and not theoretic. But my journey was really interesting. I didn't start out being in finance. I actually was a poetry major in undergrad. And because I've always said that poetry is the beauty of language. Language is this idea that gives us this emotion. And when I graduated, at the time, that's when there was transition. It was in the 90s, the transition from, the internet and newspapers were becoming less important, and
Mm.
you had more of the digital side of it with the vast internet. So I ended up going into banking to work during college. And from banking, what I realized was that poetry, literature is really storytelling. And you're selling stories, the products fit within that. And so I was really able to go from banking to UBS Investment Bank with asset management here in California in Beverly Hills. And then from there, chief economist of a private equity fund and started getting into venture capital. I noticed the difference between private equity and venture capital. And for me, the difference was one at the time sought to dismantle and extract, for lack of a better term, and the others sought to build, and I'm always about building. And so one of my first investments was a friend of mine who did a mobile in the mobile space, and that company was acquired, and I got the bug. And subsequently, I ended up being the fund manager for an accelerator director for the University of California, initially focused on climate tech, and then the city of Los Angeles with an organization called the Los Angeles Cleantech Incubator, helping launch their fund, both the equity and debt side, given my background in banking, and really having relationships with other investors in the space because it was nascent at the time. It was pre-COVID where climate was not as popular as it is now.
Mm.
And one of the things I saw in this space was that it was very homogeneous at the time, meaning that there was not a lot of people who look like both of us on this podcast. They are either female or person of color. And so me and two of the partners decided to launch Include Ventures, which is a fund of funds. And our whole theory was we wanted to include people and geographies that were not included in the conversation around building what venture is. And so we invested in fund managers, emerging fund managers of color, fund managers who were outside of the Silicon Valley Beltway, because we believed at the time, post-COVID, I say this phrase often that's been said around it is talent is universal, but opportunity is not. And we wanted to invest in those funds that captured that talent where they were at and provided the opportunity from capital, connections, customers, and culture. And so that was a really, really interesting thing. And I would say the connection to climate was at the time when we launched Include Ventures, I fell ill. I had kidney failure. And we found out that kidney failure was exacerbated and caused partly by the environment where I grew up at,
Mm.
where three of my other cousins had the same disease and passed away. And so I was the last one living. And so what that did for me is me go public about it because it allowed us to say that this climate health impact is not something that's 20 years down the line or 30 years down the line. It's not something that just impacts lower income individuals or the global south. Is an impact to someone who has some privilege in this area. And so I think that that really changed for me how I approach investing and how I approach a lot of things beyond impact and more so what I call purposeful investments in
Right.
this space because you need to have a return in order to continue to do it. You need to have impact, but you also have to have purpose. And I think that that's one of the things that I've learned over the years that sometimes we lack in impact investing.
Yeah, that's it. I mean, purpose, return, and impact is the equation. And there's been a lot of talk about impact investing as a community. I mean, I've been working for almost a decade in building impact economies in Africa and leading some of those conversations and activities. And, far too many conversations and not enough purpose behind driving that kind of capital to where it's needed. So tell us a little bit more about your thoughts on, philanthropic investments. So we've moved away from the typical, charity aid model, to really challenge how philanthropy itself is showing up in the world, how people that, sit on wealth, are allocating their capital towards more values aligned, mission aligned, purposeful investments. So tell me your thoughts on how, I mean, I personally feel that philanthropy has a massive part to play in really living up to its risk nature in terms of being able to absorb risk and innovate and show the way. In Africa, for example, everyone knows about mobile money because it just addressed a very specific need to send money to loved ones back home with really in terms of the bad roads, poor infrastructure, poor service at the banks. It was just a need, and also that the scale of Africa is huge in terms of just getting from one place to another, even urban traffic, those kinds of things, and getting to rural areas. All of these things were massive pain points that people sat down to create a solution around. And now we have mobile money as the go-to solution in terms of financial technology. That's very African in terms of its DNA. So tell me, I mean, I believe that philanthropy has a huge role to play in complementing and catalyzing private sector capital. But tell me your
Yeah,
thoughts on where you feel philanthropy and wealth management and advisory should be shifting.
absolutely. Great question, and I love it. I will start. There's a quote from an economist called Dambisa Moyo that talks about dead aid, and I've always thought about that because I think that when I talk about purpose, what purpose means is understanding how you deploy and why you deploy. I
Mm,
go back to this thing where there was some deployment of computers in a certain part of Sudan where it wasn't needed. What was needed was farming equipment, not data mining. And so I think that it's something that we should see. It's interesting toward the end, right? I just finished a deployment of catalytic capital funding from a philanthropy, Ares Charitable Foundation, as part of the private equity fund Ares. And it was a $25 million grant split between the organization I represented and also another organization that was focusing on workforce and climate. And so it complemented the investments that I made from a climate standpoint
mm,
and made me realize that we can't do it alone. You can't fight this alone. And I was fortunate to be a part of different types of organization, such as the community impact um, grant project that focused on really redefining what philanthropy is and how it's deployed. And I can step in a space when you had a lot of private capital pulled back in certain areas like climate. But you're right. I think it's complementary, and I think that philanthropy is in this point right now where it's trying to figure out how to be most effective in a space. And quite frankly, I think private equity or private capital, alternative investments needs to think about that way as well. There's been some talk that I've said for a long time that venture capital may not be the best product for climate. It might
mm.
not even be the product to deploy at certain parts of the continent that are focusing on advancement of technologies. And so I think that again, going back to the purposeful piece, you need to make sure that the capital fits the environment as opposed to just having this hole in it. And we used to say that, and they come from me from saying that everybody wants to be the Silicon X, Silicon Savannah, all these sort of things
Savannah, so yeah, exactly.
in
Something
Kenya,
but
right?
X Valley or whatever it is. Yeah, yeah.
My thing is be you,
Mm,
right? Be what makes it to where it is that capital is needed and it's effective because it's going towards what's needed in that region, but then it can expand and scale. So I think philanthropy plays a huge part in it, similar to why I think debt plays a good part in it. As a former banker to a degree, because
mm,
sometimes for startups, debt sometimes can be cheaper than equity.
yeah.
I prefer for startups, not necessary for governments. But I think that all those things come into play when you start thinking about how you truly scale a technology and more importantly, an ecosystem. Because I think really what it's about is scaling ecosystems so that those technologies can thrive within it and far beyond capital.
Yeah, I totally agree and live that. And we're trying to build, as you know, I think we talked about this earlier, just to really build a collective of really engaged catalytic impact investors, inviting some of them to attend a summit in February 2027, where we will literally sit around and structure and innovate around some of these challenges and ways that we can see the capital flowing in future and attracting private capital as well. So I really do believe in the power of blended finance if we can get it right. But I think that we at Scale Up Africa through our Catalytic Impact Summit, we'll try and really address that with a few good men and women next year. And so we look forward to continuing the conversation with you, Taj, especially with all the expertise and the different hats, literal hats that you wear. And really thank you for your brilliance and your expertise. We've been following you for such a long time and such an honor for us to have you here on the pod with us. And yeah, we look forward to collaborating more.
Thank you so much. And I and many others I know look forward to the summit next year. Thank you so much.
Thanks.